All right. Sure. Good afternoon, ladies and gentlemen. I am Gordon Shirley. As chairman of GraceKennedy and Company, it is my distinct pleasure to welcome all of you to the 2025 Annual General Meeting. I'd like to extend a very special welcome to the 50 shareholders who are here with us today in person and the 37 shareholders who are participating in the Annual General Meeting online. Thank you very much for joining us. This afternoon, we'll present to you GraceKennedy's 2024 financial performance, and our shareholders will vote on matters related to the business of our company. Before we proceed, we ask those of you here in person and online who are so inclined to join us in prayer. Ms. Diana Toussaint, our legal officer one of our legal officers at GraceKennedy, will lead us.
Almighty God, we thank you for the privilege of gathering today for this annual general meeting of GraceKennedy Limited. We're deeply grateful for the 103-year journey that has brought us to this moment, a time to reflect on the year past and to look ahead with unity and renewed vision. As we embrace our theme for this year, we are GraceKennedy, unlocking value, unleashing greatness. I pray that the full potential of our value will be unleashed in our people, our partnerships, and our purpose. May we truly unleash the greatness that you have placed within each of us. We put before you today's proceedings and ask for your presence, Lord, in every discussion, every deliberation, every decision. Grant us clarity and wisdom. I pray that all necessary protocol would be followed, Almighty God, and that the technical aspects will flow smoothly. Let it be that when we leave today, we will say it was truly good for us to have been here. So, Father, we commit these proceedings into your hands. In Jesus' name, I pray.
Thank you very much, Diana. We remain grateful for all the blessings that have been brought to us this point in this year and in the history of the 100-year history of GraceKennedy. In 2024, we build on GraceKennedy's proud legacy of excellence as our team's resilience and commitment to our vision continued to yield positive results. We achieved the historic milestone of surpassing 12 billion Jamaican dollars in profits before tax for the first time in our company's history. This was driven by strong performances for both GraceKennedy Foods and GraceKennedy Financial Group. We are grateful to all our stakeholders, including you, our valued shareholders, for your unwavering support, which continues to be instrumental in our company's success. I want to take the opportunity to pay a tribute to our former Chief Executive Officer. As many of you would know already, on February 14th of this year, the Honorable Don Webby, OJ, retired from his role as Group CEO and stepped down from the board of directors of GraceKennedy. It is with very deep appreciation and admiration that we recognize Don's extraordinary service to GraceKennedy. For 14 years, his leadership of our group was transformational. But his journey with GraceKennedy began long before. For 3 decades, Don played a pivotal role in shaping GraceKennedy into the globally competitive and respected organization that it is today. Beyond business, his deep commitment to corporate social responsibility strengthened our communities as he championed initiatives in education, youth development, and nation building. let us take a moment to reflect on his incredible legacy through this video.
There's this young man, probably 15 years old, that would sit on the stairs of this old building with the Jesuits walking past, the priest, and he would be signing his name over and over and over. And his friends would laugh after him and say, "You just sign your name, so." And I think it was a Jesuit, Ratcliffe, it was Father Quinlan or one of them, Father Ferris, that said, "Young man, why are you signing your name like that?" And the young man looked at the Jesuit or looked at the priest and said, "One day I'm going to be signing the balance sheet of one of the largest companies in Jamaica." In and without aging that person too much, that was 1982. And in 1997, you can do the mathematics how many years after, that young man signed the balance sheet of GraceKennedy. That young man is standing in front of you as your group CEO.
When Don Webby joined GraceKennedy as Group Finance Manager in 1995, it was the beginning of a journey that would see him make major moves and achieve memorable milestones, ultimately leading the company to new heights of success. Within 3 years of joining the company, Webby was appointed Group Chief Financial Officer of GraceKennedy, leading its listing on the Trinidad and Tobago Stock Exchange. 1 year later, in 1999, he undertook the additional role of Chief Operating Officer for the Financial Services Division. After spearheading several important initiatives for the group, including the acquisition of Trafalgar Commercial Bank, later rebranded First Global Bank, Webby was appointed Chief Executive Officer of GK Investments in 2006. That company would eventually become the GK Financial Group. Under his leadership, GK's Financial Services Division grew rapidly, with pre-tax profit moving from $280 million in 2000 to $1.417 billion in 2005, an increase of 406%. His proven track record for success led to the start of a new era for GraceKennedy, his appointment as Group Chief Executive Officer on July 1, 2011. From the very outset, the strength of Webby's leadership was apparent, as he built on the legacy of his predecessors, guiding GraceKennedy towards its vision of becoming a global consumer group. Webby often says, "What gets measured gets done," and his unwavering focus on execution consistently propelled GraceKennedy to achieve record-breaking results. By 2013, the company had already reached a significant milestone under his direction. Its profit before tax surpassed $5 billion Jamaican dollars for the first time. GraceKennedy's food division also began undergoing a transformative shift, forging strategic partnerships with local farmers and expanding its manufacturing capabilities. These initiatives set the company on course to become a regional leader in manufacturing, while bolstering Jamaica's self-sufficiency and supporting local production for international markets. GK also continued to extend its global reach by strengthening ties with international partners. A key milestone in this effort came in 2014, when under Webby's leadership, GraceKennedy acquired LaFay Foods, positioning its food division for rapid expansion in the U.S. market. As GraceKennedy continued to thrive, Webby's achievements earned widespread recognition. In 2015, he was awarded International Entrepreneur of the Year by the Young Caribbean Professional Network for his leadership in making GK a major player in the global marketplace and his commitment to investing in downtown Kingston and sports development in Jamaica. That same year, he was also recognized by the Institute of Chartered Accountants of Jamaica as a distinguished member for his sterling contributions to the profession, the private sector, government, and the nation. In 2016, Webby propelled GraceKennedy to yet another historic milestone, with the company paying over $1 billion Jamaican dollars in dividends for the first time. It was also a special year for Webby personally, as he was honored by his alma mater, St. George's College, by being inducted into its Hall of Fame for excellence and achievement in business, community spirit, and service to the college. With momentum building, Webby continued to drive GK's strategic growth and expansion, and acquisitions became a key area of focus. In 2017, Consumer Brands Limited, a distribution company for Procter & Gamble, was added to the group. By the end of 2018, GK had also secured stakes in Catherine's Peak, Grace Pepper, and Majesty Foods, and had acquired Globe Finance through its Barbados-based business Signia. Then in 2019, GraceKennedy and the Musson Group announced a partnership to enter the group life and health insurance market under the name Canopy Insurance Limited. The same year, GraceKennedy delivered another record-breaking performance, surpassing revenues of 100 billion Jamaican dollars, a full 3 years ahead of target. In 2019, a key milestone of Webby's vision for GraceKennedy became a reality with the opening of the company's new headquarters at 42 to 56 Harbour Street. This landmark development, the results of years of planning and a Jamaican $3 billion investment, underscored his commitment to remaining deeply rooted in Jamaica and the revitalization of downtown Kingston while strengthening GraceKennedy's global presence. To close out the year on a high note, the dedication and hard work of the team led by Webby earned GraceKennedy the prestigious Jamaica Stock Exchange Governor General's Award for Excellence. At the ceremony, Webby was also recognized for his transformational leadership in championing the formation of the JSE's junior market. He had long envisioned the junior market as a platform to help small companies grow by providing access to capital while fostering investment opportunities in Jamaica. As a new decade began in 2020, GraceKennedy was already on a path of further growth, marked by significant acquisitions, including a majority stake in Key Insurance Company and the purchase of Scotia Insurance Eastern Caribbean Limited in 2021, later rebranded as GK Life Insurance. The acquisition of the 876 Springwater brand in 2021 also strengthened GK's position in the Jamaican springwater market. Additionally, the launch of GK's digital factory highlighted Webby's commitment to technological innovation and the digital expansion of the group's operations, products, and services. Despite the unprecedented challenges of the COVID-19 pandemic during this period, Webby ensured GraceKennedy remained resilient, prioritizing the well-being of its team, customers, and communities while maintaining business continuity with the mantra, "Stronger Together." His steady leadership not only drove record-breaking employee engagement scores, but also delivered exceptional financial performance, reinforcing GK's strength and commitment to those it serves in times of crisis. 2021 ended with another acknowledgement of GK's strides and the strength of its leadership, with the Governor General's Award for Excellence at the Jamaica Stock Exchange Best Practices Awards. While that accolade was a source of immense pride for Webby, his greatest fulfillment came from achieving a key goal he had set for the Grace and Staff Community Development Foundation. A firm believer that opportunity is all underserved youth need to succeed, he set an ambitious target for the foundation, providing tuition assistance to over 1,000 Jamaican students by GK's 100th anniversary. Well ahead of the centenary, that goal became a reality, reflecting his deep commitment to education and community development. 100 years of GraceKennedy was only the beginning. The group moved full speed ahead in 2023, acquiring full ownership of Scotia Insurance Caribbean Limited, later rebranded as GK Life. This strategic move expanded GK's credit life insurance business to 13 Caribbean markets within just 2 years. GK also acquired Unibev Limited and increased its ownership in Catherine's Peak, further cementing its market position as a leader in Jamaica's springwater sector. That year, the company surpassed the US $1 billion revenue mark, a significant milestone in its journey to becoming a US $2.1 billion company by 2030. Webby's remarkable contributions to business and entrepreneurship in Jamaica were nationally recognized when he was awarded the Order of Jamaica, one of the country's highest honors. A remarkable leader, transformational, formidable, and deeply compassionate. A man with vision, a head for business, and a heart for people. Someone who understands that alone we can do so little, but together we can do so much. Your accomplishments outweigh your years of service, and words cannot fully express the depth of love and gratitude we have for you, Don. Anyone can hold the helm when the seas are calm, but you have led GK through choppy waters, adjusting its sails and steering it to sustained success. A true leader knows the way, shows the way, and goes the way, translating vision into reality. You have done all these things and more. You are the true measure of a true leader, the true measure of a man.
On behalf of the Board of Directors, the management team, and the entire GraceKennedy family, we thank Don for his vision, leadership, and unwavering dedication. There's no doubt that his legacy will endure, and we know he will continue to be a guiding force in the company's journey. Thank you very much, Don. And congratulations on a well-earned retirement. Don's retirement marked the beginning of a significant leadership transition for our group, as we welcomed our new group CEO, Mr. Frank James. Frank has been an integral part of the GraceKennedy family for nearly 20 years, rising through the ranks with distinction. A strategic thinker and results-driven leader, he has held key positions across the group, from strategic planning and corporate development to corporate finance, investment, and insurance. As Group CFO, he played a critical role in strengthening our financial position, ensuring that we remain competitive and agile in a rapidly evolving global market. Most recently, as Chief Executive Officer of GraceKennedy Foods Domestic, he has led with vision and tenacity, driving growth in one of our core business areas. Frank is not just a leader in finance and strategy. He's a leader in action. Over the years, he has spearheaded major acquisitions, divestments, and capital-raising initiatives, and helped shape the GraceKennedy we know today. He has a deep understanding of our business, our people, our values, and he possesses the foresight and determination needed to take us to the next level. The board is confident that Frank will usher in an era marked by a clear and ambitious strategy, leading GraceKennedy to even greater milestones as we continue our journey to become a global consumer group. His leadership will ensure that we expand our reach, strengthen our brands, and deliver even greater value to our customers, shareholders, and partners. I'm very pleased to welcome Frank, who is attending today's AGM in his new capacity as Group CEO for the first time. As we look forward to the remainder of 2025, GraceKennedy stands committed to innovation, sustainability, and good corporate citizenship. This year's theme, We Are GraceKennedy, Unlocking Value, Unleashing Greatness, confirms our continued focus on excellence and outstanding leadership. On behalf of the GraceKennedy Board of Directors, I take this opportunity to express our sincere appreciation to the GraceKennedy team, our customers, business partners, shareholders, and communities we serve all across the globe. Now to the business of today's meeting. Mrs. Gail Moss-Solomon, our General Counsel and Chief Corporate Secretary of GraceKennedy and Company, will perform the function of Corporate Secretary at today's AGM. Madam Secretary, will you please advise if a quorum is present?
Yes, Chair, I can confirm that the quorum of 3, as set out in our articles at number 63, is indeed present.
We do have a few more than 3. Thank you, Mrs. Moss Solomon. Please take us through the protocols of today's meeting.
Thank you, Chair. Good afternoon, everyone, again. And we are asking that you adhere to the following protocols for today's AGM. Shareholders and proxies who are here in person should have all received a paddle. So this is the paddle, and we ask that you raise the paddle if you wish to move or second a motion, if you wish to indicate your vote on a resolution, or if you wish to ask a question. When you registered for today's meeting, whether online or in person, you would have either identified yourself as a shareholder or a non-shareholder. As is customary, only shareholders or their duly appointed proxies are permitted to move and second motions and to vote on resolutions. Non-shareholders are not permitted to move or second motions or vote, but you are, as a non-shareholder, of course, encouraged to ask questions either in person or via email to gkinvestor@gkco.com. For shareholders online, please vote on resolutions by clicking the for or against button, which will appear on your screen. Shareholders who are here in person, please raise your paddle to vote. Shareholders online, you will have 15 seconds to cast your vote, after which the results of each resolution will be announced. Half an hour has been allotted for the question and answer segment of the meeting. During the Q&A, we will take the questions in the order that they have been received. We will first answer any questions we received via email prior to the meeting. Then we will take questions from those who are here in person. Finally, we will respond to any questions which we received via email during the meeting. We encourage you to be brief when asking your questions, please, so that others may also be given the opportunity, and every effort will be made to address all questions this afternoon, time permitting. We would also ask that you introduce yourself when you're asking a question. Thank you so much to everyone who has already submitted questions. For those participating online, there is still time to submit questions via email. Please send them to gkinvestor@gkco.com. For our online participants, please also note that to avoid undue disruption, your microphones have been disabled. We invite you to use the chat box at the bottom of your screen to interact with the other virtual participants and to make comments. Please note, however, that questions should not be submitted using the chat, as only questions sent via email to gkinvestor@gkco.com will be addressed during the Q&A segment. For our shareholders online, in the event you experience any technical challenges during today's meeting, you may reach out to our team for assistance by calling 876-932-3160 or send an email to gkinvestor@gkco.com. For our shareholders and attendees who are in the room with us today, we kindly ask that you put your phones and other electronic devices in a mode that will not unduly disturb the business of today's meeting. Thank you very much. In the event that there is an emergency which requires us to leave the building, please follow the instructions of the ushers. You will see our ushers who are dressed in white or black GraceKennedy branded shirts. They will direct you to the nearest exit. Thank you so much for complying with these protocols, and we look forward to a successful meeting. Finally, today's AGM is being live streamed and recorded to enhance shareholder participation in the AGM and provide an opportunity for persons who are unable to attend the meeting in person to view today's proceedings. The recording will then be uploaded to the GK YouTube channel. GraceKennedy is committed to protecting your personal information. For further details on how we protect your personal information, you may access a copy of our privacy notice at www.gracekennedy.com, or feel free to send us an email at gkinvestor@gkco.com. Thank you very much.
Thank you very much, Mrs. Moss Solomon. The notice of today's AGM was published in newspapers in Jamaica and Trinidad and Tobago and was also posted on Grace Kennedy's website and the websites of the Jamaica Stock Exchange and the Trinidad and Tobago Stock Exchange. The AGM notice also appears in our 2024 annual report. The notice convening this meeting was published within the statutory period of 21 days, and copies are available here today. With your permission, I will take the notice as having been read. Thank you, shareholders. We are very pleased to have the director of GraceKennedy Limited, the directors of GraceKennedy Limited present here this afternoon. Mr. Frank James, Mr. Andrew Masado, Dr. Indiana Mintokoy, Dr. Gina Phillips Black, Chair of the Corporate Governance and Nomination Committee, Mr. Peter Williams, Chair of the Audit Committee, and Dr. Paris Loyi Jr. and Mrs. Vanessa Rizzioli will be joining us online. Our Group CEO, Frank James, will now present on the performance of the company for the year ended December 31, 2024. He will be joined by our Group CFO, Mr. Andrew Masado, in making this presentation. Frank?
Thank you, Chairman. Good afternoon, shareholders, guests, ladies and gentlemen. It is a tremendous honor and privilege for me to be sharing with you today at our AGM. It is, while not the first time, it is certainly in a very different capacity this time. So after 103 days in the seat, not that I'm counting, Catherine, each day, but after 103 days in the seat, I want to start by saying a big thank you. Thank you to all of you for the tremendous, tremendous support and trust that you have shown me over the last few months through your telephone calls, emails, WhatsApps, and even visits from a number of our shareholders and other stakeholders. I want you to know that I do not take this awesome responsibility of running your great company, our great company, and serving you, our shareholders, lightly. And I also do not take the trust that you have placed in me for granted. So again, thank you very much for that trust and support. 103 years is truly a great legacy. You know, we started as a small Jamaican trading company right here in downtown Kingston. That picture you see is the original building, which is still part of us, just across the road. And today, we are selling our products in over 50 countries across the world. Starting, yes, I think that's worthy. Starting from a modest financial performance, today we are generating revenues of over $1 billion US. Importantly, over those 103 years, we have not just generated profits, but we have lived our We Care mantra, our We Care ethos, of giving back to our communities and the wider society. Truly a great legacy. And this legacy wasn't built by chance or by accident or even by good fortune. It was built by the tireless work of generations of GraceKennedy men and women and of some great leaders. It is the result of our core values, which were instilled by the founding families, the Graces, Kennedys, Solomons, Alexanders. I'm very pleased to see that A number of those family members are here. Fred, Georgie, Marjorie, Catherine. It's great to see members of the family. I have had, when you look on that screen, you see many of them, and I have had the tremendous privilege of being personally mentored by 3 of the gentlemen that you see on that screen. Raf Diaz, Douglas Arain, and Don Webby. And I'm very happy to say that Douglas Arain, our former chairman and CEO, is here with us today. Happy to recognize Mr. Douglas Arain. These men are giants of business, and more importantly, they are men of true character, who have not only shaped, yes, integrity, our company, but our country and the region, and indeed their impact has been felt beyond the region. So I consider myself extremely fortunate to be benefiting from the combined intellect and experience of these gentlemen that I have been able to learn from. I must pay special tribute to one of those gentlemen, Don Webby. Don is the one who I would have worked with the longest and the closest. You watched that video that spoke about a lot of his accomplishments. I won't share any more of that with you, but I'll tell you about my relationship with him. Since joining GK in 2005, I have worked very closely with Don on a number of projects, and in 2012, when I became Group CFO, we worked even closer together. He not only mentored me, but he challenged and empowered me. And those of you who know, he would call me Franco. So he would often say, Franco, I have all the confidence in you. You can do it. And you would have seen in the video where we said, what gets measured gets done. So he would also measure and make sure that I got it done. Don, who quite likely is watching us, you are a visionary and astute leader, a very demanding leader who pushed me to deliver my best. Thanks, DW. I would not be standing here today if it were not for you. So the baton having been passed to me, I want to share with you today at our AGM the outstanding team that we have first, some of the ways in which your company has been recognized and awarded during 2024, the numbers or financial highlights, how we're going to be executing, how we have been executing our strategy and how we're going to be executing, and of course, our We Care ethos, and finally, where we're heading in the future through our 2030 vision. So let me start by saying to you that we are very, very privileged as a GraceKennedy Group to have an exceptional board of directors who continue to play a pivotal role in guiding our company. While the chairman introduced them previously, please allow me also to recognize our directors who have been very helpful in guiding the leadership team. It is great to see Gina, Peter, Indiana here in person, and of course, online we have Paris and Vanessa. So thank you very much, Board of Directors. I want to say a personal thank you to our group chairman, Professor Gordon Shirley. I indicated earlier a number of great leaders who have impacted my career and life. Looming very large in that circle is Professor Gordon Shirley. So Prof has not only mentored me up to this point, he continues to be a mentor, a guide, and a friend. Prof, your unwavering support and your willingness to unreservedly share your keen intellect, strategic insights, and vast experience with me have been invaluable. And so I say a big thank you. So the good news is, as I take on this new responsibility, I'm not alone. I have an outstanding executive team that can match up with any in the world, the best in the world. So your company, I assure you, is in great hands. We had previously recognized, but allow me to recognize Andrew Mesado, our Group CFO, who also did an outstanding job as acting Group CEO. I want to thank him for that. We have here with us as well Andrea Coy. Andrea, GK Foods CEO. Grace Burnett. Grace, CEO for GKFG. Stephen Whittingham, Deputy CEO for GKFG. And then the lady that keeps us in line with all matters HR, Annette Morrison. Welcome, Annette. And of course, you would have already met Gail Mosalomon, our Chief Legal Counsel. So we have a phenomenal leadership team in place, strategic vision, experience, intellect, and most importantly, a commitment to the core values of GraceKennedy. I want to share with you some of the leadership changes that have happened this year. On the 14th of February, where we made the transition, we appointed Mrs. Andrea Coy as CEO of GraceKennedy Foods. This brought together, in line with our 2030 vision, both the domestic and international foods portfolio under Andrea's leadership. And I can assure you there's no one better positioned to realize the kind of synergies that we know will be generated from the leadership of Andrea over our food business. Grace Burnett, who you just met, will be retiring later this year. Do not be fooled by her very youthful appearance. It is not early retirement, although you would think so. Grace is an amazing leader and has had an outstanding career here at GraceKennedy, a 25-year career, and she has been recognized by numerous awards and continues to be recognized for the work that she has done. I'm asking Grace if you can stand and be recognized. Thank you very much, Grace, and we look forward to being able to celebrate with you later this year. Stephen, who you just met and who has already been very instrumental in a number of the transformational initiatives across the group, will be taking over from Grace in August when Grace retires. Welcome, Stephen. Congratulations. We have had a few additional changes. I'm very pleased to also advise that as at the beginning of this year, Carrie Ann Lincoln took over the position of Divisional CFO for GraceKennedy Foods. She was previously in the UK as CFO. And Deborah Dodd, who you'll remember as CFO for GK Foods, is now the CFO for the GraceKennedy Financial Group. These two ladies are very formidable ladies. I've worked with both of them very closely, and I know that they are going to bring a lot of value in their new roles. So Deborah is here, and it is Kerry's on maternity leave, but we welcome them both in their new roles. And then on the 1st of April, most recently, Margaret Campbell, who has been with the GraceKennedy Money Services Group for many years. She won't allow me to tell you how many years, but she has been through the ranks in the Money Services Group and has continued to do a fantastic job there. And we're very pleased that she will be taking over, or has taken over, as the CEO of the GK Money Services Group. So well done, Margaret. And that, of course, is in line with Grace Burnett's pending retirement, as Grace had been running the GKMS group for us. And then Leanne Bruce, who was previously our Chief Audit Executive, and before that was actually a part of the Money Services Group, also on the 1st of April, took over as Chief Operating Officer of the GKMS group. Leanne? Two very dynamic ladies, very excited about what they will be doing with our Money Services Group. So your company, as I said, is in great hands. And during 2024, your company was recognized in a number of areas. So I want to share this short video with you that highlights some of our recognition and awards in 2024. So in 2024, you would have seen that we earned numerous awards, from ESG to Extraordinary Distributor of the Year, from food innovation to personal recognition to some of our leaders. Your company has been making great strides, winning in 2024. I want to share with you now the numbers. And you will see that we have continued to demonstrate growth over the last 5 years, consistently growing in revenue. As I mentioned, in 2023, we surpassed the $1 billion mark, and in 2024, we took it to a new high at $1.1 billion or 167 billion Jamaican dollars, growing at just under 8% of our revenue over 2023. So your group continues to grow its revenue base. Where has that revenue been generated? The revenue has come primarily from 3 main markets: Jamaica, North America, and the UK and Europe, as well as the Caribbean countries and some other regions. But what's important about this, you will notice that all markets have been growing. All our markets, we have been growing over the last 5 years. You will actually notice that in 2024, 42% of our revenue is being generated outside of Jamaica, and 58% is being generated inside Jamaica. That is up from 56%. Now, as you know, we have a target to grow our revenue outside Jamaica, ultimately to get to 70% of our revenue. The Jamaican economy and the Jamaican market, with all its challenges, I need to say a big thank you to our consumers and customers here, because they have continued to support us, continued to choose us. So you've actually seen that that growth has been strong. As we look into the future, we expect Jamaica to continue to grow, but we believe that we have the opportunity to grow even more aggressively and faster outside of Jamaica. So in the same way that all markets have been growing over the last 5 years, we expect all markets to continue growing, and we expect to be growing faster outside of Jamaica. What about our profit? So our pre-tax profits, as you will see, also both inside and outside Jamaica have continued to grow over the years. We are now at 41% being generated outside of Jamaica. That's up from 39%. So we have seen the improvement in the profitability outside Jamaica. And as I said, both in and outside of Jamaica continue to grow and will continue to grow in the future. How has that translated to you, our shareholders, in terms of profit attributable to stockholders? Again, we have continued to see steady growth since 2019, growing each year. 2021, you'll notice we had some one-offs in that year, some one-off gains related to acquisitions. But apart from that, the trend is very clear that we continue to grow our profits year over year. So we reached a new high in 2024 of $8.4 billion in profit attributable to stockholders. And that was up 8.1% versus 2023. Andrew is going to go into a lot more detail about the segments, but I want to share with you here that of our 4 segments, 3 of those segments all showed growth: food, banking and investments, and insurance. Food, which accounts for about 64% of profits, grew at 22%, banking and investments at 26%, and insurance, coming off a very strong year, the previous year of 55% growth, showed an 8% growth in 2024. So where did we see the decline? So very strong growth in all 3 segments. Where we saw the decline was in our remittance business. Now, it's important to understand that in that business, where we're undergoing quite a bit of change, and that's really changing globally. It's not unique to GraceKennedy. The remittance industry is changing globally. And so what we are seeing is that even though we continue to grow our market share, for example, in Jamaica, those of you who were listening to the news, you would have heard that remittances were growing, but we are growing faster than the market. So we are continuing to take market share. But globally, the cost or the price for sending remittances is actually coming down. And that is causing a squeeze in margins in the short term. But that's actually not a bad thing. It is actually designed to allow people to send money globally at a lower cost. That means our customers will find it easier and cheaper to send money. But in the short term, it does have this impact on our margin. So what it means, and and I say that, I think of Carlton Alexander, who said, what's good for Jamaica is good for GraceKennedy. This is good for Jamaica, that the cost of being able to send remittances around the world to loved ones is coming down. And so it's good for GraceKennedy because more people will be able to send remittances. What it requires of us, though, is that we change our business model. And we are very, very far advanced and very proactive in doing that. A key to that is going to be the change to digital. And that is an area that we are actually doing very well in. Our digital business has grown by 44% 2024 over 2023, our digital remittance business. So we are growing that part of the business very aggressively. And what that is doing is allowing persons to actually send at even lower costs around the world. And it is taking significant costs out of our business as well. So it's a win-win. It's a win for our customers, and it's also a win for the business. And I'm going to share with you a little later where we are going with our digital transformation. But digital remittances is the way of the future. It is happening all around the world. You're seeing it at over 50% around the world, whereas in Jamaica, it's just over 20%. So that spells opportunity. There's a long runway for the growth of digital remittances. Now, many of you would have heard recently the issue of taxes on remittances out of our key corridor, the United States. Of course, that is a concern because anything that increases the cost of sending remittances will be a challenge. It's something that we are working closely with Western Union, and globally, all the remittance companies are watching this very closely and actively working on any solutions around that. We, of course, still view the solution the same, and it's digital, because if you want to send a digital transaction, we can do that at maybe 30 to 40% of what it would cost you to send a regular remittance transaction through retail. So that means even with a 3 or 5% tax, we'll be finding ways to bring down the cost of sending remittances. Also, we have found that Jamaica's remittance business has always been resilient because people are sending for their families and their loved ones. So even in the face of harsh economic times, persons have continued to send, and we expect that to continue. So we're very mindful of that. It's something that we're watching very closely, but we believe the solutions that we are providing for our customers will help to reduce the cost even in the face of things such as remittance taxes. And as I said, I will share with you a little later where we are with the remittance and our digital transformation generally. All right, so that was 2024. We have already hit the ground running in 2025. So I'll share with you briefly, and Andrew will go into more details of our first quarter performance. Revenues were up just about 4.5%, 4.4%, or $1.9 billion over 2024 first quarter, hitting $44.2 billion for the first quarter. And our net profit attributable to stockholders was also up $64 million, or 3%, hitting $2.2 billion for the first quarter of 2025. So we continue to show growth for the first quarter, and we'll be working very hard to deliver growth to you this year. What has this financial performance meant for stockholders? Well, one aspect of that, of course, is the stock price. And as you can see from this graph, it's not the prettiest graph. For the last 8 years, there has been an increase, but you'll see that in the last 4 years, there has been a decline. And if you look at the blue line is the general market, or the main index. So what you can see is that there has been a real correlation between the stock price and the general market, where the general market has come down. And there are a number of things that have impacted that. Interest rates during the COVID period had gone up and remain relatively high, and that has weighed on the stock market. More recently, the level of global uncertainty, first with the wars that we had seen over the last few years, and now generally with the geopolitical instability, has also weighed on the stock market. So we are seeing the impact on our stock price. Our focus is to continue to deliver strong financial performance. And we believe that by delivering that strong financial performance, the stock market will eventually reflect the value of the GraceKennedy stock. You'll see in previous years, sometimes that realization of value lags a bit. If you look in 2021, when the stock market responded, even though the rest of the stock market was slightly flat, it took a little while for GraceKennedy stock. So the stock market might have a lag effect, but we believe by focusing on our financial performance and growing our business for the long term, the stock market will eventually reflect the value. The other thing I'd note is that the BOJ has actually reduced interest rates this year for the first time this year by 25 basis points, and even ahead of the movement by the Fed. So with that trend, if that trend continues, if we see interest rates coming down, it should also augur well for the stock market. However, the stock price is not the only way in which we return value to our shareholders. Last year, you'll recall, it actually started at the end of 2023, went through to November 2024. We had a share buyback program. That share buyback program allowed us to repurchase 6.4 million shares of the company's outstanding shares. That has now been closed as of November 2024. Dividends. We have consistently grown our dividends, and you will see that over the last 5... Yes, Livingston, thank you. Livingston is pleased. We have seen a near 50% increase in dividends paid out versus the last 5 years, and Andrew will share a lot more with that. We always have to strike the balance between how much we pay out, whether through share buybacks or dividends, with reinvesting in the company for future growth, because we are very excited about the future and very optimistic about the future. And so we also will be reinvesting in the business for future growth to generate even greater returns to shareholders in the future. So how will these great returns come about? This is a strategy we'll be following. 4 key strategic drivers: growth and sustainability, customer centricity and innovation, operational efficiency, performance-driven organization. And I'm going to highlight some of the initiatives under each of these, both that have been executed and those that we will be executing in the future. So we have under mergers and acquisitions, which will continue to play a key role for the group in its growth strategy. We have increased our stake in Spur Tree Spices, and we will continue to find these opportunities where we have these innovative companies with innovative products that match with ours to take a stake in that business. So that business is now an associated company of GraceKennedy with shareholding just over 20%. We completed the 100% acquisition of Catherine's Peak. As you remember, we had been doing that in tranches, so we purchased 35%, another 35%, and now in 2025, we have acquired fully the Catherine's Peak brand. So we now dominate the spring water market with both the Catherine's Peak brand and the 876 brand fully owned, as well as our own water source and factory in Unibev. This is really very important because it not only allows us to further penetrate the Jamaican market, but we have started to export these products as well. I had shared with you at our investor briefing earlier in the year that we would be entering Cayman with the Catherine's Peak brand. I'm proud to say that we delivered on that, and we have started exporting Catherine's Peak to Cayman. I'm also happy to say that I told you at that time that we're not stopping at Cayman, we're going to be finding other territories, and we will start to export Catherine's Peak in this quarter to Barbados. So we are expanding our Catherine's Peak business to Barbados. You would have also seen where we acquired Key Insurance a number of years ago, and that has gone well. We have seen the growth in that business. We have seen consistent profitability. And more recently this year, we have made an offer to do a full buyout of the remaining shares of Key Insurance. This is an important strategic move for us, which will really allow us to consolidate our holdings in Key Insurance and realize greater operational efficiencies and synergies in the insurance space. As you know, we have GK General Insurance, and we'll now have Key Insurance, and that will make us a key player in the insurance business. So looking forward to what will come out of that. We have already passed the threshold, which will allow us to delist, key insurance. And so that's the direction in which we are going, and the opportunity for other shareholders to sell their remaining shareholding remains open until July 11. M&A will continue, as I said, to be key to our growth strategy, and we continue to explore opportunities, identifying targets in North and Central America, Latin America, UK, and Europe that meet our strategic criteria. We're having discussions directly with some parties, others we're going through our investment bankers. Can't say too much, but we are excited about the opportunities in the M&A space. Another key area of growth is going to be through strategic partnerships. And one such strategic partnership that has worked extremely well for us is our partnership between GK General Insurance and Scotia with the Scotia Protect program. This has resulted in substantial growth in our premiums in the GK General Insurance business. This is really a digital platform that allows Scotiabank customers to take insurance out through GK General Insurance. And that has been going extremely well. As you see on the screen there, over 200% increase in written premiums. That was in 2024, and the growth continues. There's opportunities to increase the product offerings there and also to expand regionally with this product, and we are exploring those discussions very actively. Our Grace and Grace-owned brands, very, very important for us, and those continue to grow, both in Jamaica and internationally. We have added over 1,000 new points of sale as we continue to drive distribution throughout Jamaica. We have seen double-digit growth in our food service channel, a very important channel that we're going to continue targeting. And in our international markets, you are seeing us expand our distribution points with some of the key retailers. So we're talking about over 500 public stores where we have added new SKUs. Encona sauces are now listed in Tesco Express in the UK. Our new Tropical Rhythms 1 litre is being listed in Sainsbury in the UK. So we continue to drive penetration through listings in these key retailers. In 2025, we're going to be continuing to expand our geographic reach in the US, moving further west, similarly in Canada, moving into Western Canada, and we see big opportunities there. I mentioned food service. You would have heard announcements of 6 new hotels to start in this new fiscal year, bringing well over 5,000 rooms, so we see this as a big opportunity. So we continue to drive growth in our Grace and Grace-owned brands through growth in distribution and partnering with distributors in our international markets. Another area of growth and sustainability is our business model transformation for our money services. Other than digital, we still are going to be operating through omnichannel because there are still persons who need and want the retail outlets. So we're still going to have that. And what we have done is we have found retailers who already have a strong footprint in high traffic areas, in trusted retailers, such as Courts, such as our own Hilo. And we are using those as outlets for Western Union. But a very exciting element of our transformation is how we're going to be using AI. And we're going to be really driving our customer contact and customer service. So we are at the approval phase of implementing an AI-enabled contact center as a service solution, which will really allow an increased capacity to reach to our customers, for our customers to reach us, for them to find solutions to some of their most basic problems, reduce the time that it takes to resolve issues, and always be on, right? So we are actively utilizing AI in finding solutions for our customers. We're also looking at how we optimize the network for GKMS, because we can't just continue to grow the physical footprint when we're also growing the digital footprint. So we're really being very selective, using data to determine where we should have a physical presence and where we will have the digital presence. As speaking about digital, our digital transformation, a big part of that strategy is our GK1 app. And if you don't yet have the GK1 app, you need to download it today. Go to the Google Store and download the GK1 app. It really is fantastic. It is Jamaica's leading digital wallet for remittances. It has the strongest repeat usage, exceeding 80%. And it is not just limited to remittances. You are able to go on there and do your insurance as well. And so there are many features, and in the future, we're going to be adding more features to it. We're going to be adding more banking features. You can link to high-low from it currently. And so it is going to be a one-stop shop for all of your GraceKennedy needs. We have also launched GKG Online 2.0, where you can go online and renew your policies in minutes. We'll be launching new features in the GK1 app. And as I had shared with you earlier, we're going to be expanding this to new markets because it makes expansion a lot easier. I told you we'll be going into Cayman, Trinidad, Guyana, and we are well on the way. We have actually completed Western Union certification for Cayman, Guyana, and Trinidad, and we will actually be starting a pilot in the coming weeks with some of our customers in these markets. So this year, we will be in those 3 markets. I wanted to share a bit through a video, nothing like actually seeing it for yourself, so watch this video.
Want a fast and easy way to get your Western Union money transfers? Give your sender your wallet ID. You can find it in the GK1 app. Simply log into the app. At the bottom right of the screen, select More. Then, your wallet ID is located at the top of the screen under your name. Collect your money faster with GK1.
All right, so go and download the GK1 app today. Customer centricity and innovation. Innovation is going to be key to our future. We have already in 2024 started launching a number of exciting products. You'll see on the screen there our sparkling TR that has been launched in the UK, and that is doing very well. And this year we are already starting to launch new products. Those of you who remember Zesty, I know some people don't want to age themselves, so they're not saying they remember. But Zesty is back. So we have our new Grace Zesty, and it is doing very well. So make sure you go and look out for it. And also, you will have seen, I promised that we would have our new Easy Open cheese for Easter, and we did have it on shelves for Easter. So you can just lift up, and you just pop the tin, and you get your cheese, right? Now, some people have said they like to fight with the cheese, so we have both options for our customers. But we are responding to their needs. This would have been introduced to you last year in Jamaica. It was actually in the UK before. It has come to Jamaica and done very well. And so now this year, just recently launched, we have launched it in our US market. And I'm really happy to say that we have also gotten it listed in Walmart. So your Grace Exotic chips you will be finding in Walmart when you visit the next Walmart. So we are innovating and we are growing our product offering. Artificial intelligence. This is going to be big, and so we are not waiting. We are being very proactive about it. And a big part of that is really getting our team members, our staff, to understand what AI is and understand how it can help them to be more productive and more efficient and to meet their customers' needs. So we have an AI team led by Deidre Cousins, Deidre, our Chief Information Officer, who have been very active. We have actually launched our AI policy. And as you have seen, the remittance business is going to be using AI in its business to actually meet customer needs. So this, again, a key area of innovation, artificial intelligence. Operational efficiency, very, very important for us. Manufacturing continues to be key. Our acquisition in Unibev has performed well in 2024. We have increased uptime for the factory lines by 40%. Or now, can you remember a few years ago we spoke about that merger? That merger has started to deliver benefits and exceeding our profit targets last year, and has also again started out very strong this year. We will continue to execute our modernization plan for our factories, finding ways to take costs out of the business, out of our products that we manufacture so we can be more competitive. I mentioned Catherine Speak Export. 876 is actually being exported to Cayman, Antigua, and Barbados. So we're also exporting our 876 water. Importantly for our manufacturing business is our ESG strategy. So we will also be looking at reducing the use of virgin plastic in our bottled products, including our spring water products. And we're going to reduce that by 25% in 2025. Solar energy, we continue to roll that project out, both in our factories and in our high-low stores. And this is a win-win. It's a win for the environment. It supports our ESG strategy, but it's also a win for our bottom line. So in 2024, it resulted in savings going to the bottom line of over $330,000. This year, we expect savings of over $600,000. And well before 2030, it will be generating savings of over $1 million for GraceKennedy Group. Logistics and supply chain optimization. This has become a very key area of focus over the last 5 years. And as you see, it is only becoming more and more challenging. And therefore, our investments in this area are going to be paying off for us. We have seen our improvements in our service levels as we have gone through all elements of our process. We're talking about training of our people, implementation of new technology, building relationship with our retailers, building out our logistics and warehousing infrastructure. And that is going to continue as this area continues to be a very important one for us. We're going to be expanding our distribution center in Spanish Town. You see the picture there, by an additional 25,000 square feet because the business continues to grow. And so we're going to be expanding to meet that growing need. We also are very mindful of the global environment in which we are operating and the trade environment in which we are operating. So you would have all heard about the tariffs being implemented. Sometimes they're on hold, sometimes they're a go. But in either case, we are preparing for those tariffs and have been preparing. So a number of strategies. One, we have to be optimizing our sourcing strategies. And it's important for us always to have alternate sources of our key products. And so that is an ongoing process. We're managing our inventory very carefully. Where there are opportunities to bring forward inventory, we bring forward that inventory. Where there's opportunities to take cost, because the real impact of this is that it can cost more for our consumers, especially in the US market. And that's a reality. There is no way that we will be able to absorb the full effect of a 10% tariff increase. So it can mean increased cost, but what we are doing is working with our suppliers, with our retailers, with our partners to see how we can shield our consumers as best as possible from those price increases. So we are being very proactive, and you can be assured that that situation, we have done a number of scenarios on it, and we are measuring the effect of it, and we are ensuring that we can protect our consumers as best as possible and making our operations more efficient to meet any environment in the future. Technology continues to be a key area to drive operating efficiency. We have invested in S/4HANA. You have heard about that over the last few years. The implementation has gone well. Now it is time to drive the benefits of that implementation, to drive the adoption of the usage of that. An exciting one that you probably haven't heard much about is our FGB online platform. We are redoing our entire core banking system for First Global Bank, and that is going to bring us a lot of benefits. It's going to allow us to streamline the onboarding process. Many of you have gone and tried to sign up for new bank accounts, and that can be very painful. We're going to be streamlining that onboarding process, enabling customers to open savings accounts, complete your KYC verification, set up your debit cards. All of these things now will be able to be done online, and we'll have swift online loan applications for unsecured loans and motor vehicle loans, and depending on the nature of those loans, you can get automated decisions. We're also piloting that onboarding platform. Come Q3 of this year, we want to be able to actually launch our onboarding element, and then the full platform, the full upgrade, should be done by Q2 of 2026. None of this happens without people, and so we continue to be very focused on driving the engagement of our team to make sure that we can deliver all that we have mentioned. I'm happy to say that we have seen a consistent growth in employee engagement, reaching a new record high in 2024 of 75%. This is 8 points above the global benchmark of 67%. So we feel that we are doing well, but we're not getting complacent. We take the feedback from our team members and we continue to implement initiatives to drive employee engagement. We'll be focusing on succession planning, leadership development as we prepare our team for the future. We need to make sure with the rapidly changing environment that we're facing that we have the skill sets that will be able to deliver for the company in the future, and that will be the focus of our HR and leadership teams. We have a purpose behind all we do, and so we want to continue to demonstrate our We Care ethos. ESG has become a documented part. It's always been a part of us, but we have now documented it as a part of our 2030 vision. And a lot of exciting things happening in that area. We have been able to prevent 1.5 million kilograms of waste from entering the Kingston Harbour. I personally went on a trip with Caroline and her team, and it is really amazing to see the work that the foundation is doing through the Harbour Cleanup Project. Well done, Caroline. It's when you go and we actually did it from the water side, so you could see the amount of waste that continues to come through the gullies. But guess what? It's not going all the way into the harbour anymore. It's being stopped by these barriers and then being taken away by the work that the team is doing. Really, really excellent project and one that we need to continue to support and grow. We have invested just under $300 million in our community investment and corporate social responsibility initiatives. And importantly, it's not just money that we hand out, but our people get involved in supporting these initiatives. So over 2,359 volunteer hours, and we want to increase that significantly over the next few years. Our foundations continue to do marvelous work. A lot of what I shared with you, the GK Foundation is really driving in terms of the Kingston Harbour Cleanup Project, but it's not just about that. It's also our university students who face hunger on a daily basis. You wouldn't know this, but it's a very serious issue. And so through our food bank, we have been able to support over 7,700 university students in being able to get a meal. So on a monthly basis, we're talking about 300 students that we're feeding. And then at special times like exam time and so on, we have a big drive where we feed even more students. And this is something I want to encourage all of you to support. If you go, Catherine will tell you, in high-low stores, you'll see the opportunity to support this food bank. So please reach out and support. We continue our scholarships and bursaries, over $33 million in scholarships and bursaries. And our Grace and Staff Foundation just continues to do a fantastic job, especially the counseling services. Not something we talk about a lot, but there are so many people that need someone to talk to. And we have persons trained who sit with the people in the community and support them through the difficult times. So we want to really recognize Grace and Staff and Sandrina for her work. We continue to care as we look at opportunities to support agriculture. You know, Hurricane Beryl hit last year. We donated $10 million, 6.25 in terms of a new generator, and $3.5 million in terms of getting the farmers back to work through seeds and fertilizer. And we continue to find ways to support agriculture. On our financial services side as well, we have our Weather Protect. First Global Bank has special loan facilities. And in 2025, we are actually doing a very creative thing by looking at how we can create a new organic fertilizer. This is using the waste that's generated from our agro operations in St. Elizabeth and turning that into fertilizer. And so this is a very exciting initiative. I think we have acquired, you remember, the agro park in about 2023. And that is allowing us to experiment with different best practices and then sharing with those with the farmers. And so through innovative ideas like this, we are continuing to support agriculture in Jamaica, and we think this is an important initiative of the group. Our food festival was launched for the first time in 2024. a way to give back to our consumers and say thank you for choosing Grace Foods, and to also give back to charities because the funds go to a number of charities selected by our consumers. We continue to invest in downtown Kingston with the acquisition of a number of properties along Harbour Street, including Breezy Castle, and we're looking at ways that we can use that Breezy Castle field to support community activities. I'm not sure who was impersonating your group CEO in that video, and I'm not sure how it got in this presentation. But Champs is a very important way that we give back to the community. It is not just about the branding, which is very important, but it's really how we support our young people in their athletic endeavors. And it's really just fantastic to see our young people coming out and putting it all out there on the field. This year was particularly special for us because we were able to honor Don at Champs. And as you know, this was a very special area for him, something he was very committed to and something that we continue to be committed to. And he was not only honored by us through the creation of a sportsmanship award, but he was honored by the government of Jamaica with a Lifetime Achievement Award. And you will see his beautiful daughter who came and collected that on his behalf. So Champs again this year, a really big success for the GraceKennedy Group. This is a very, very important area that doesn't get enough discussion in Jamaica. It is the issue of childhood trauma. And GK Foundation had their lecture this year, and Professor Wendell Abel spoke on this very important issue. And I am so pleased to see how through this lecture it has raised the dialogue on this topic in Jamaica in such a meaningful way. There's been so much discussion since then, and that's exactly what our foundation lectures are about, to really raise key topics that need to be discussed in Jamaica. So if you haven't seen it, I encourage you, it is online. It is very, very important that we all get a lot more familiar with this topic as we seek to find solutions. We speak a lot about what we do here in Jamaica, and that's because this is home, and Jamaica will always be home for GraceKennedy. But guess what? Our care does not stop here. It actually extends abroad. So I want to share with you some of the things that we have been doing in our territories abroad. We have supported flood victims in the Caribbean. We have contributed to various charities, including mustard seed communities and missionaries of the poor, and I'm talking outside of Jamaica. In Canada, we have partnered with the Jamaican Canadian Association to support its scholarship programs and contributed to hurricane relief efforts. In the UK, we have been making a lot of donations, both in cash and in kind, to hospitals and community initiatives. And also, we have our primary school, our local primary school, where we have a Christmas in a Bag campaign. And in the US, we have launched our inaugural back-to-school supply drive. So it's important for you to understand that as a global company, we are supporting the communities all over the world where we operate and where we see need. In closing, our 2030 vision remains the same. We want to not just generate profits, as we will continue to do, but we have a purpose in actually creating a better global society and greater financial well-being. We want to be the #1 Caribbean brand in the world, and we want to provide strong returns to you, our shareholders. And of course, we want to improve the quality of life of our team members, customers, and the communities we serve. What does that mean in terms of the numbers we need to achieve by 2030? We want to get to 2.1 billion in revenue and 250 million in profits. M&A is going to be an important part of getting us there, and that's why we say we continue to drive that. We want to have 70% of our revenue and profits generated outside of Jamaica, not by Jamaica slowing down, but by expanding our reach in our international markets. You'll also see there the idea of listing our food business on an international stock exchange. What our advisors have said to us is, look, those numbers that you're trying to achieve, that's what you need to achieve to really make it attractive to go on an international stock exchange. So our focus for now is to hit those numbers. When we get to those numbers, it will provide the platform for us to look at really listing. In the meantime, Andrew will share with you that we are being proactive and putting the necessary things in place And underlying all of this, of course, is our team and our commitment to our ESG strategy. I mentioned our core values earlier. This is who we are. Our core values speak to how we treat each other, the respect we show to each other, our honesty in all our dealings. It speaks to how we make our decisions on a day-to-day basis. So you have my commitment, you have the commitment of the entire executive team, that we remain committed to each and every one of these core values. How we treat each other, how we treat our communities, how we treat our shareholders and all our stakeholders, and the decisions we make each and every day are going to be guided by honesty, integrity, trust, commitment, humility, and respect each and every time. In closing, I want to highlight our theme for this year. We are GraceKennedy, unlocking value, unleashing greatness. We are GraceKennedy speaks to that 103-year legacy. It speaks to the core values that we stand by. And unleashing greatness is what our people are doing each and every day to be able to unlock value for you, our shareholders, and all our stakeholders. Thank you all very much. Thank you for the support during this debut. And I appreciate it very much. I'm happy to hand over to my group CFO, Mr. Andrew Mesado, to take it from here. Andrew, over to you.
Okay, good afternoon, everyone. And after that very comprehensive overview, I think it's just for me to say ditto. So I'm just going to do a few pullouts of the financial highlights for 2024 and then give a recap of the Q1 2025 results. So let's move to that one. So these are the key financial metrics for 2024. And as you can see, they are all in the positive territory. And starting with revenue, up by $12 billion, 7.8%. Of that $12 billion increase, $9 billion came from the food division. And then we also saw good growth in our banking and investment and insurance portfolios. I'll just deal with the segment results a little later on. In terms of profit before other income, this is a good measure of the operating performance. And you saw in Frank's presentation a number of initiatives related to operational efficiency, whether it's logistics, energy savings, IT, and other areas. So this is an important metric. And as you can see, our operating profit is up by 6% to $8 billion. Profit before tax, that's usually a line that everybody's interested in. And as was said earlier by our chairman, this year was a historic year where we surpassed $12 billion in profit before tax, growing by 8.6%. Other than our subsidiaries or associated companies also did very well to contribute to this profit before tax line, companies like Dairy Industries, Canopy Insurance as well. And then net profit attributable to shareholders. So this is the line that's really speaking to your profits as shareholders. It's the part that after we take out the non-controlling interest owned by other stakeholders, that your profit is the one attributable here, growing by 8.1% to $8.4 billion. In terms of our assets, significant growth in our asset base by 7.8%, up now to $236 billion. And then you'll see our stockholders' equity growing by 10%, almost approaching $90 billion at $87 billion. Now, this equity, of course, speaks to the strength of the group in terms of our ability to invest that equity for future growth. It also speaks to that our ability to pay dividends out of that retained profit. And then it also speaks to the capital base we have for our regulated entities. As you know, in the financial service industry, whether it's insurance, banking, or asset management, all of those entities have capital adequacy ratios. And so we ensure that a sufficient amount of that equity is retained to make sure that we meet those regulatory ratio requirements and have a capacity to grow. And this is both the existing regulations as well as future regulations like Basel III coming up for the banking industry. So very important that we maintain a strong equity base. Of course, as I just said, in terms of equity base, it does allow us to pay dividends out of that. And as you can see, over the last 5 years, we have shown consistent growth in our dividend payout. Each year, it has shown an improvement. Last year, growing by just over 9% to $2.35 billion. And as you would have heard announced recently, in the middle of May, we have announced a second interim dividend payment for 2025, which will be paid on the 20th of June. So you can look out for that dividend payment coming up. I'll then highlight a bit of the segment performance in terms of revenue first. As I had mentioned before, the food division has the lion's share of our revenue, and that grew by $9 billion, or 7.3%. You would have seen that banking and investments also did well, both banking and investments and insurance growing by double digits in terms of their revenue. For banking and investments, we saw good loan growth for First Global Bank, growing their loan portfolio by over $4 billion in 2024, and therefore getting interest income on that loan portfolio. Insurance, over the past 3 years, we have invested heavily in the Eastern Caribbean and other Caribbean territories outside of Jamaica, and so our GK Life business has been growing well, and as you heard from Frank, the partnership with Scotia also showing good growth for our insurance business. Money services, a marginal decline by 2.5%. Frank went into quite a bit of detail around the challenges in the money services business generally, not just specific to GraceKennedy or Western Union, but just flows being lower flows into the Caribbean, in particular countries like Ghana. And then I'll just highlight on the profit side that you'll see for profits, 3 out of the 4 segments showing positive returns, showing growth in the business. You would note that 3 of the 4 segments have profits of over $2 billion. So just last year, insurance is now in the $2 billion club. And banking and investments is back in over $1 billion. So all our segments showing profits over $1 billion. And many years ago we talked about profit diversification to make sure that all our segments are strong. And as you see, that is something that we're continue to work towards and has borne fruit. Our food trading division has shown very strong growth in 2024, 21% growth there. And it's both in our domestic and our international food businesses. In Jamaica, our sales and distribution businesses, World Brands, CBL, or GFS division that distributes the Grace and Grace-owned brands, all of those sales and distribution businesses showed growth. Our retail side of the business through Hilo also showed improved performance, and in our factories also showing good profitability. You heard earlier about Nalcan, all the investment that we did and the merger of Nalpro and the canning factories, showing good efficiency gains. And then on the international side, also very strong growth in all our major international markets, the USA, Canada, and UK. As you heard earlier as well, a lot of new products being launched and products that have global appeal. So, we may start them in one market, like the exotic chips in the UK. We brought that to Jamaica last year, and this year we've now brought that to the US market. And then sparkling TR in the UK. Who knows where next you'll see sparkling TR? But of course, another carbonated beverage, Zesty, has been relaunched in Jamaica. So we continue to look at products that have global appeal and appeal not just to the Caribbean diaspora, but also to mainstream customers across the world. Because as you know, ethnic brands and exotic food is quite appealing now globally. And so in terms of money services, I'd mentioned already the challenges with flows into the Caribbean. But of course, that doesn't daunt us. As you have heard, in terms of our digital platform, we're continuing to look for ways to make it convenient and give options to our customers. So, our customers, some customers may still want to go in branch. It makes sense sometimes if it's on the way to do, you need to cash out and go to the supermarket or do something with the cash. Otherwise, on a Sunday night, you could be on your GK1 app and you just have it sent direct to wallet or send it to your bank account. So again, giving our customers choices on how to use our products. So as you can see, in terms of our segments, overall, our segments are up and our diversification helps when a segment may be down sometimes, but as you can see, the other segments lift it, and overall, we're ahead. Then in terms of our financial position, I did cover some of this earlier in terms of the equity base growing. In terms of our assets as well, some of the big areas in terms of asset improvement would be our investment securities, our investment in additional fixed assets. So we're investing in our factories, in upgrading our factories, improving equipment there. In our high-low stores, we're doing renovations. We did Manor Park, and we did the UWI branch, and we have a few others being done now, Mobe, Church Street, Spanish Town. And then we have other investments in our IT platforms as well. So you can tell that these are things that are building for the future and the growth of the company. And as you'll see, in terms of our debt equity, that's our borrowings divided by equity, it's showing a little decline, which is actually a good thing because it means that we have capacity to borrow more in the future if we need to make some additional investments. So again, we continue to make sure that we have the ability to invest in the future. And then in terms of the allocation of our funds, I mentioned already in terms of capital investments. So I talked about the factories, I talked about IT, and also we're investing in additional warehouse space in the USA. We have a new distribution center in Atlanta, and we continue to invest in our other facilities so that we can have enough capacity to increase both our distribution lines and channels. So you can see in 2024, we invested over $5 billion in additional capital. In terms of our return on equity, it has been fairly steady for the last 3 years, and this investment sometimes has a timing effect. So as we invest, it is expected to yield improved returns in the future. Now, very quickly, I'll give you a little recap on Q1 results. So in terms of revenue, we are up compared to 2024 for the first 3 months of the year. You'll see that 3 of our 4 segments showed growth in revenue. Our food division, our banking and investments, and our insurance portfolios continue to grow. Money services showing a marginal decline there. Again, we are configuring that division to make sure that we can serve our customers, give them the right options, and then the return will come. One thing to note is that we have been seeing improved market share. So even in the face of market pressures generally in Jamaica, the company is doing well. So I think I covered most of the things I wanted to say about revenue on this side. I did mention, especially on the food side, a number of new products being launched, others to come. So keep watching there. And then our banking subsidiary continues to show improved performance and growth in its loan book of business. In terms of insurance, our health business, as well as our property and motor portfolios for the general insurance businesses, continue to show improved revenue as well. On the profit side, again, 3 of our 4 segments showed growth. We saw a double-digit growth for both banking and investments and insurance segments. Food growing strongly as well, over $189 million in additional profits for our food division. And then money services, we're looking at areas here, including efficiency, to make sure that we can restore its profitability to where we would like it to be. But overall, again, our profit before tax did show a very modest improvement. And as we mentioned, the attributable profit to the group was up 3%. So I would say for 2025, we've started on a positive note. And with the plans we have, our intention is to ensure that the group continues on the right trajectory. So thank you very much.
Thank you very much, Frank and Andrew, for those 2 very comprehensive but very interesting presentations. Ladies and gentlemen, we'll take the next 30 minutes or so to answer your questions. Frank James, our Group CEO, will answer the questions with the assistance of the GK Senior Leadership Team. We'll now take the questions received via email prior to the meeting. I have a list in here of several questions, but a number of them relate to one particular issue. So I'm going to read those, 4 of those that deal with the same thing, and ask Frank and Andrew to address it. First is that, what's the biggest operational bottleneck that you have identified that could delay the overseas listing of GK Foods? And how are you addressing it now? So the underlying issue there is listing of GK Foods overseas. The second question says, at what revenue milestone, 1.5 billion, 1.7 billion, do you expect the overseas listing of GK Foods to become viable? And are you tracking towards that inflection point ahead of schedule? A third question says, for GK Foods overseas, are you finding that international investors are more interested now than then when you first announced the strategy of listing in 2022? And the fourth one says, it was previously stated that listing GK Foods overseas would be preceded by an acquisition. Is that still the plan? And if so, what's the timeline on that? So I think, Franco, all of these relate to the interest that has been sparked with the notion of listing on the overseas stock market. You spoke a bit to it in your presentation, but maybe you'd want to restate some of that.
Sure, thanks, Chairman, and thanks for those questions on the overseas listing. As I did mention, that in our focus right now is really getting the financial numbers to a level that would be interesting to the market based on the feedback we have gotten from our investment bankers. I'm going to ask Andrew to speak in a little more detail about any bottlenecks that are being seen and how those are being dealt with, but let me address the element on acquisitions, which was the last part of the question mentioned, the Chairman. We are, as I said, seeing M&A as a continued area of focus, and those M&As, as I mentioned, will look at markets outside of Jamaica as well. So in the same way that some years ago we saw a very big acquisition in Lafayette, we do think there are going to be opportunities, whether in US, Canada, UK, Europe, or even Central America, Latin America, South America. We will be looking at areas for those opportunities. Andrew, would you like to speak to probably some of the bottlenecks and where we have reached in the process?
Sure, thanks. And so what I'd say is we have been meeting with investment bankers, first of all, to decide what's the appropriate market internationally to list on. One that has been talked about is that an exchange in the US market, but that has to be a choice. But we've been speaking with investment bankers about what are kind of the key milestones that need to be achieved in order for it to make sense for GraceKennedy and make sense for an international investor to invest. And so some of those items are things like, do you have the right governance structure in place? Do you have the right operational efficiency? Where is your revenue being earned? Do you have the majority of your revenue being earned in developed markets? These are things that are appealing to international investors. And on some of those counts, we definitely tick the box in terms of we're ready. But on others, for example, our revenues, you'll note that we still have the majority of our revenue in Jamaica, 58%. So we kind of need to be above 50% overseas before an international investor would be really interested in us as a global company. And so that's one of the milestones we'd have to reach. So I would say we have a checklist in terms of key items, and we're going through them, working through them. But really, the key thing is to make sure that we hit those 2030 targets that were announced, because those are the primary ones that need to be achieved in order for an international listing to make sense.
Thank you very much, Frank and Andrew. The next question on the list says, I'm asking that we shareholders and spouses of GraceKennedy be given discounts of not less than 10% whenever we shop at any high-low food store at any time. I previously made this request to GraceKennedy's top management. I don't think it's beyond the company to make this a reality for us, proud shareholders. Cost should not be a factor here. Similar arrangements are done for Grace employees and civil servants. This question comes from Shelton Wilkinson in Montego Bay.
Thank you, Chairman, and thanks, Mr. Wilkinson. We are always looking for ways to enhance value to our shareholders. I'm going to ask Catherine Kennedy, our General Manager for Hilo. But let me give her a little support before she answers. We have examined this very carefully, and because of the thousands, literally thousands of shareholders that we're very pleased are shopping at Hilo.
Absolutely.
It's not feasible for us to implement that discount. But what we have done is examined the many ways that we can offer value to our shareholders. And that's really what I want Catherine to share with you, the many alternatives you have currently in terms of discounts and other value offerings that shareholders are able to take advantage of. Catherine?
Thank you, Frank. So, good afternoon, fellow shareholders and stakeholders in GraceKennedy. So, Hilo, in fact, we take a serious look on a frequent basis on the value that we're giving to our customers and the wider consumer base in Jamaica. And currently, we offer many ways to save. So on a monthly basis, we do deals with our vendor partners where we have 20 products that we feature on a monthly basis. Every month it's a different 20 products. and you can get discounts on those 20 products of up to 20%. So significant shareholding, significant savings on those 20 products. And those range from beverages to staple items to specialty products. So very attractive on a monthly basis. We also, for our healthcare workers and for our civil servants, we offer a weekly discount. And it also qualifies for those people who are pensioners in the healthcare service as well as civil servants. So please walk with your IDs if you're a healthcare worker or a pensioner or civil servant. Of course, our GraceKennedy pensioners also benefit from our employee discounts that we offer. So if you're a GraceKennedy pensioner, you have access to that as well. We also, on a Thursday, if you are a GKVR member, which is our GraceKennedy Value Rewards, it's our loyalty program that covers the whole group. You can sign up for free. You get discounts at high-low on Thursdays on produce, 20% discount on produce each and every Thursday if you're a GKVR member. So there are an extended number of discounts and valid deals that we offer. And I want to emphasize GKVR because it is an extremely powerful platform. So for every $100 that you spend at high-low and GK Insurance, you earn 1 point. Those points qualify you to, 1 point is equal to $1. So if you're in high-low shopping every week and every month, by the end of the year, trust me, let me tell you, your Christmas basket is covered through GKVR. Right, Grace? Right. So it's a very powerful tool. I encourage each and every one of you, if you're not a member of GKVR, to sign up. So there are many, many different ways that you can save through high-low. So you can follow us on social media. We have all of the details around our discounts and value vaults, which are those value deals that we do on a monthly basis with our vendor partners, which of course include GFS, Grace Foods and Services, World Brands, and Consumer Brands. Thank you.
So, Mr. James, my understanding of that answer is that go on GK social media, get the information, join GKVR, and you might get more than a 10% that is being requested. Thank you very much, Catherine, for that, those responses. The next question that we've been asked is, despite the good results, acquisition and a share buyback, the share price has remained stagnant for 2 years. Will you consider a stock split and or a more aggressive share buyback to unlock more value?
Chairman, and thanks to the shareholder for that question. It's an area that we are always looking at. I shared with you that a lot of the impact we are seeing on the share price is really as a result of the general market conditions that we are currently facing. And so you're seeing it across the indexes. And so we expect, as that improves, that by creating the performance that we have been doing, we'll see the value returning to the stock. And we have seen that happen in the past, and we expect that that will happen in the future. I'm going to ask Andrew to speak specifically to the questions of stock splits and share buybacks.
Thanks. So we do evaluate what's kind of the best way to make sure that shareholders' value can be enhanced. And that changes from time to time. What I'd say is consistently, though, the most important thing is to make sure our results remain strong and improve. As you would have known, we did have a share buyback program over the last year, and we think that served its purpose at the time. But share buyback program is not free, in terms of it requires a company to use its cash resources to buy back shares. And therefore, we continue to evaluate what's the best way going forward. What I'd say is, at this point, especially in line with our 2030 vision, what we're really looking for now are acquisition targets, and we are trying to ensure that we can use our resources to acquire additional businesses, and that those businesses will further unlock value in terms of accretive to the group and grow our profitability. So at this point in time, our focus is more towards redirecting the funds to future investments rather than the share buyback, because of the market sentiment generally in terms of investors not as drawn towards equities at this point in time. We don't believe that it would have as good an impact to use those market mechanisms like repurchases, but instead to use things that will for investments for the future.
Thank you, Andrew and Frank. The final question from the list that we received online says, will Spurtree lose its tax break because they are now an associate company of GraceKennedy?
Stephen Whittingham to just speak to that.
Good afternoon, everyone. The answer is that Spurtree remains listed on the junior market, and as a junior market listed company, it benefits from the original tax holiday, which was 5 years, full tax holiday, and after 5 years, it's a 50% tax holiday, so it continues.
Thank you, Stephen. So now we'll turn to take questions from those present in the room. Please recall, Mrs. Moss Solomon said to you earlier, the protocol is that you raise your paddle to indicate that you would like to ask a question. The microphone will be brought to you. We encourage you, I'm asking that you identify yourself by first and last name when asking questions. And even if you are a regular attender and asking questions, not everybody knows you, and we want them to get to know you. So let me see the show of paddles. Yeah.
Yeah, Livingston Young. Livingston Young. Shareholders. Mr. James, I have a question. Back in the 40s, we never have online platform. We'd have the phone there where you put up on the night spin. You know the phone there? Spin, that was the online back in the days. But at least I never born in time, in the 70s, I born. But by hearing things, you know, the time GraceKennedy down for Harbour Street, we live a country back in the 70s, because I born in 1971. So just have a big up with the online. That's the thing we're doing, like the pepper, this Jamaican product. The online is a great thing that you can expand the company more better and all them way there. All right, you can turn to page 186. Note 3C. This is Jamaican dollars and US dollars. Dear Mr. Chairman, as of from December 31st, 2024, financial assets, your cash and deposit, investment securities, trading and receivables, subsidiaries. You can explain to me the cash and cash deposit of $1,643,930. Investment securities, $4,253,000. Could you explain to me in the Jamaican, US, GBP, CA, and Canadian dollars and explanation of them, please?
Thanks for that question.
Yeah.
So what this table is attempting to do is show how our assets are allocated among different currencies. And so as you can see in this particular table, this is related to the company, which is just a parent company of GraceKennedy, and it is showing the financial assets which it's held in both Jamaican and US dollars. There's actually no holdings in pounds Canadian or euros or in another currency, you'll see that the majority of the assets are held, of the financial assets are held in the parent company in Jamaican dollars. So in relation to cash and deposits, the $1.6 billion there is the amount that's held in Jamaican dollars, whereas 56 million is held in US. And similarly, for investment securities, the $4.2 billion of those investment securities are held in local currency, Jamaican dollars. And then the Jamaican equivalent, which is $3.3 billion, is held in US dollars.
Mr. Chair, what made up this trading at others? Others, receivables. What made up of 2,532,582? What made up that?
So trade receivables are primarily from our customers. So when we sell to customers, whether it be supermarkets or gas stations, corner stores, those customers, some of those customers would owe us. So that's the primary item in that line.
I want to look at this, the US or something. I don't know if it made up of a devaluation, revaluation. This thing here, the Jamaican and the US. And when it went up, when the dollars go up, they make a problem. When it go down, I don't know if it based upon that. Devaluation, revaluation.
Right. So I mean, it shows the holdings we have in those currencies. For financial assets in particular, like our bank accounts and our investment securities, if the Jamaican dollar devalues, then you would have a situation where you could make a gain in those currencies. But of course, that's not the primary reason for holding it in those currencies. It just is whether we are owed, if we have invested in those other currencies, and it may change value based on the relative value of each currency.
Yeah. So your subsidiaries what made up your subsidiaries are 4 million something. Can you tell me, look at the subsidiaries?
Before you answer, I'm going to ask that after this, you allow somebody else to ask a question.
Yeah.
And I'll ask Stephen Whittenham when you're finished, or Andrew, to go through that table with you and clarify all of the things that you want to have clarified there.
Yeah, the reason why I asked, I see the banking and others loan of 10,174,000. What made up this traded payables? Your payables are 3,500,000. Give an explanation, please. Financial liability. Financial liability.
So in terms of the different lines, this is really looking at our financial assets and liabilities. So subsidiaries would be the amounts that other companies within the group owe the parent company. And then in terms of the trade and other liabilities, again, this is what we would owe our suppliers primarily for goods that we have purchased.
All right. Thanks a lot.
Thanks, Livingston. Mrs. Kennedy?
Oh, start again. Good afternoon, everyone. I'm Georgie Kennedy. I was so very pleased to hear the announcement about organic fertilizer. And it's a hot topic in Jamaica. I'm sure you've seen all the talk about what's in the food. And I was wondering if there had been any talk or exploration within the company about movement to or takeovers of companies that are producing organic foods.
Thanks so much for that question, Georgie. I'm going to ask Andrea Coy to speak to some of the areas in which we're looking at around Better for You, and including organic and other elements of Better for You, whether through M&A or through our own innovation. Andrea?
So thank you, Frank. I think Frank has summed it up. Our strategy is to identify based on consumer trends. And the consumers are telling us now that they're interested in better for you products, and we're very careful how we define that, because when you think about organic, it requires certain certifications, etc. So it is on our roadmap, and generally our approach to innovation and new products or acquisitions, because as we look at acquisitions, we're looking at not just existing categories, but new categories based again on consumer trends. So Better for You is definitely one of those, and organic is a subset of that.
Thanks. Afternoon. You're going to miss me because of the column in the reel.
Yes, go ahead, sir.
Let's walk to the front. Easier. Afternoon, Chairman. Afternoon, fellow shareholders and persons watching online. David was shareholder. So, just a couple quick questions, and I know the time constraint given the depth and breadth of GK and what we discussed so far. So, first question is related to the insurance segment. So, GK would have recently launched the takeover bid to acquire their remaining interest in Key Insurance. There's been 2 extensions, and, there's been no context given as to why the extension has been given, twice. So, the first question is, what's the reason for such a continued extension, almost 4 months post original starting date, and, the other part is, why, this time now in terms of, just acquiring Key. Because, the only thing I saw in the takeover circular says that, the offer has no immediate plans to reduce Key's workforce. However, to align with the strategic goals, the company may undergo strategic changes, post acquisition. So what's taking place right there?
Can you ask the second one, and we'll just do both of them at the same time?
No, it's the same. It's
the same thing.
Yeah, the first part is about why the extension. The second part is about why you're acquiring it and the plans post transaction.
Thank you. Thank you, sir.
All right, thanks very much, David. I'm going to ask Stephen again to just speak to where we have reached with that. I think I had mentioned some of it, David, in my own presentation, that we have achieved one of the targets in terms of the threshold to delist, and then there's a second target that we're going after, which Stephen will expound on.
Yeah, no, so thank you, David. I knew you would ask that question, so I was expecting that from you. It's good to see you. So, David, the answer is that GraceKennedy, in its circular, spoke of its intention to delist Key Insurance once the process is completed. Being a shareholder, a minority shareholder in a public listed company affords you a lot of benefits, like the ability to come here and the reporting, and it also affords you other benefits like your ability to liquidate your shares, tax with their tax benefits associated with that. There are a lot of other benefits in terms of that whole being a part of a listed company. Now, those benefits go away if you remain as a minority shareholder in a company that has been delisted. And so, in keeping with GraceKennedy's approach to being a good corporate citizen, we have thought it prudent to allow everyone in the marketplace the appropriate amount of time to be able to participate in that process. We don't want to be in a situation where that process would have closed and there are people who still wanted to participate. And so those invitations, the documentation keeps on coming in, and so we just thought it prudent to allow people as much time as possible to participate. In terms of our plans to going forward, the group CEO spoke about our intention to consolidate our insurance business. It's not necessarily about people or layoffs or anything of that nature. It's really about operational efficiency and capacities to streamline the business and work together. Having a public listed in general insurance, a non-public listed, just adds complexity in a world where we're trying to make life simpler and to be able to effectively serve our customers.
So just to follow up on your response, Stephen, you mentioned consolidation. In what format or structure then? It's a consolidation of or streamlining of the business. So like what structure or format are you referring to in that context?
Well, David, I don't really want to get into the specifics.
It's a valid question.
Of our corporate strategy, but I think consolidation is a fair point, David. So
no, consolidation can mean you merge with two businesses, or it can mean that certain elements of a business or profitable, move to one business, in this case GKGI, and keep focus on a particular segment? It's a valid question.
No, David. I think I understand the question, but I think we've said consolidation generally is the approach, and this is not necessarily the forum to get into the specifics of what that consolidation looks like.
No, but one other thing you mentioned is that you're trying to get second threshold for the delisting of 90%. You're trying to get the 90% threshold for the squeeze out, basically.
So there's a threshold for a mandatory takeover, and so there's a threshold for mandatory takeover, and there's also a threshold for compulsory acquisition of all the shares. And so I think the group CEO has been very clear as to sort of where we are in that process. And the key, I just want to make sure, the takeaway here is that there are a lot of small minority shareholders in the company that we want to afford the time. They're not institutional investors. We want to afford them the time to be able to participate. And not everyone, in a month has the capacity to do so.
Thanks.
Thank you very much, David. We'll have some of the executives talk to you, David. I want to spread it around. We have 1 minute and 30 seconds left in our time frame.
Hello, good afternoon.
Hi, Al.
We're in the middle
You
of
have to introduce yourself.
Oh, I beg your pardon. Al Edwards, Hour Today. Chairman, we're in the middle of a turbulent, unsettling decade. We had COVID 2020. We had the supply chain issues. Here we are, 2025. We have tariff issues, protectionism. Globalization seems to be out of the window. In that period, Grace has prospered. Given that fact, and to insulate yourself, would you ever consider having a shipping arm so you have end-to-end for your goods? No, I'm serious, in the sense that you manufacture, you can go south-south, you can go to those markets, and you won't have those impediments.
So, thanks for that, Al. You saw one of the pillars, innovation, so you're focusing in on that. Interesting. The Kennedy family is here, they'll tell you we're in shipping. And there was a famous boat, Catherine, that was there. We don't have any immediate plans, Al, to get into shipping. That's not on the immediate horizon. You did mention that we live in a very dynamic environment and things are always changing. But as it stands today, we believe that there are opportunities for us to find ways to partner in the appropriate ways. We have been building our, strategic alliances in a very careful manner around the whole matter of logistics and supply chain. We believe the investments that we're making in technology will be key in how we manage the risks around our supply chain and those relationships. So at this time, there are no immediate plans for shipping. Al, thanks for the question.
Thank you very much, shareholders, for those very interesting questions. Unfortunately, we are out of time, but what I'd like to point out is that all the senior executives, and I think the company has done a skillful job in getting you to see who they are. Just go and grab them once we are out here, and they will answer any of the questions you have. Even if you catch Andrea, she'll still answer the finance questions. And Stephen will also do that for foods, right? These are multi-talented guys. The other way that we can have, because we do appreciate the interest that is shown, we can do gkinvestor. GKinvestor online.
At gkco.com.
There you go.
gkinvestor@gkco.com.
If you do that, we guarantee you'll get an answer, a fulsome answer to your question. Ladies and gentlemen, we are now at the end of the time, as I've said, and we therefore thank Frank and his team again for their presentations and responding so fulsomely to all the questions. We turn to the section of the report, which deals with our audited group accounts. This serves shareholders to advise that the auditor's report, the director's report, and the audited group accounts have been tabled for this meeting. A copy of these reports can be found at pages 118 to 126, 96 to 97, 127 to 131, respectively, in your annual report. With your permission, I will take the director's report as having been read. Yes, sir. Just a minute, Livingston. Somebody raise their hand over there. A paddle. Yes, go ahead, Livingston. Oh, you're moving. we haven't quite got there yet, Livingston. I was just asking. I'm just asking whether you have read the report, and I know you have read it. Thank you, shareholders. I now invite Mr. Paul Williams of PricewaterhouseCoopers to read the auditor's report.
Good afternoon. Thanks, Prof. Independence Auditor's Report to the members of GraceKennedy Limited. Report on the audit of the consolidated and standalone financial statements. Our opinion. In our opinion, the consolidated financial statement and the standalone financial statement gives a true and fair view of the consolidated financial position of GraceKennedy Limited, the company, and its subsidiary, together the group, and the standalone financial position of the company as at December 31st, 2024, and of their consolidated and standalone financial performance and their consolidated and standalone cash flow for the year then ended in accordance with IFRS accounting standard with the requirement of the Jamaican Companies Act. We have audited the group consolidated and standalone financial statement comprise the consolidated statement of financial position as of 31st December 2024, the consolidated income statement for the year then ended, the consolidated statement of comprehensive income for the year then ended, the consolidated statement of changes in equity for the year then ended, the consolidated statement of cash flow for the year then ended, the company statement of financial position as of December 31st, 2024, the company income statement for the year then ended, the company statement of comprehensive income for the year then ended, the company statement of changes in equity for the year then ended, the company statement of cash flow for the year then ended, and the notes to the financial statement comprising material accounting policy information and other explanatory information. Basis for our opinion. We conducted our audit in accordance with International Standard on Auditing ISAs. Our responsibilities under those standards are further described in the auditor's responsibility for the audit of the consolidated and standalone financial statement section of our report. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Independence. We are independent of the group in accordance with International Code of Ethics for Professional Accountants, including International Independence Standard, issued by the International Ethics Standard Board of Accountants, the IESBA Code. We have fulfilled our other ethical responsibility in accordance with the said code. Our audit approach, audit scope. As part of designing our audit, we determine materiality and assess the risk of material misstatement in the consolidated and standalone financial statement. In particular, we consider whether management made subjective judgments, for example, in respect of significant accounting estimate that involve making assumptions, considering future events that are inherently uncertain. Also, in all of our audit, we are also addressed the risk of management override of internal controls, including, among other matters, consideration of whether there was evidence of bias that represent a material misstatement due to fraud. We have tailored our audit scope. We have tailored our group audit scope. We tailor the scope of our audit in order to perform sufficient work to enable us to provide an opinion on the consolidated financial statement as a whole, taking into account the structure of the group, the accounting processes, and controls the industry in which the group operates. In assessing the risk of material misstatement of the group consolidated financial statement, and to ensure we have adequate quantitative coverage of the significant accounts in the consolidated financial statement, we design and perform audit procedures over various components. The group comprised 52 reporting components, of which we selected 30 components, which represent the principal business unit within the group and covers entities within Jamaica, Barbados, Belize, Cayman, the British Virgin Islands, Trinidad and Tobago, Turks and Caicos Islands, Eastern Caribbean countries, Canada, the United Kingdom, the United States of America, and Guyana. Of the 30 components selected, we perform an audit of the completed financial information of 15 components, which were selected based on their size, risk characteristic, or both. For the remaining 15 components, we perform audit procedures and specify accounts on our specified procedure within the component that we consider had the potential of greatest impact on the significant accounts in the consolidated financial statement, either due to size of these accounts or the risk profile. The audit work performed covered 97% of the group total revenue and 95% of total asset. In relation to the remaining component, we perform other procedures, including analytical review, procedures, and testing of consolidated journal, intercompany eliminations, and foreign currency translation recalculation to respond to any potential risk of material misstatement of the group consolidated financial statement. For components that are scoped in the group audit, we use component auditor from PwC network firms and non-PwC firms who are familiar with the local laws and regulations to perform this audit work. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the consolidated and standalone financial statement for the current period. These matters were addressed in the context of our audit of the consolidated and standalone financial statement as a whole, and in forming our opinion thereon, we do not provide a separate opinion on these matters. The first key audit matter covers the valuation of insurance contract liabilities for insurance contract for the group. Refer to Note 2R, 4IV, and 17 of the financial statement for disclosure of related material accounting policies, estimates, and balances. As of 31st December 2024, total insurance contract liability accounted for amounted to 11.65 billion, or 8% of the total liabilities of the group. Insurance contract liabilities are determined in accordance with IFRS 17 insurance contract. The group is liable for all insured events that occur during the terms of the contract, even if the loss is discovered after the end of the contract term. As a result, liability claims are settled over a long period of time, and a portion of the claims provision relate to IBNR claims. Management uses qualified external actuaries to assess in determining the valuation of these insurance liabilities, to which management apply a discount rate, a risk adjustment factor for non-financial risk. The cost of capital method was used to derive the overall risk adjustment for non-financial risks. In the cost of capital method, the risk adjustment is determined by applying a cost rate to the present value of projected capital relating to non-financial risks. The bottom-up approach was used to derive the discount rate. Under this approach, the discount rate is determined as a risk-free yield adjusted for the difference in liquidity characteristics between financial assets used to derive the risk-free yield and the relevant liability cash flow, known as the illiquidity premium. The risk-free rate was derived using government bonds, rates available in the market denominated in the same currency as the product being measured. We focus on this area due to the complexity in actuarial method and significant management judgment applying the discount rate, the risk adjustment factor, and the claim settlement pattern. How our audit addressed this key audit matter. The approach to addressing this matter with the assistance of our own actuarial expert involved the following procedures, among others. We evaluated the accounting policy for any material changes. We also update our understanding of management end-to-end process and controls, supporting the determination of insurance contract liabilities. We tested on a sample basis the completeness, the accuracy, the reliability of the insurance contract, and related claim to source document as it pertains to premium, unearned premium, claims, outstanding, and claims paid. We also assess the independence, experience, and objectivity of management actuarial expert. We also evaluated the suitability of the methodology used by management actuaries in establishing insurance contract liabilities against established actuarial practice and our knowledge and experience. We perform a methodology and assumption assessment of management determination of discount rate and risk adjustment in the actuarial valuation, considering market data and component-specific facts. We also evaluated and tested the reasonableness of management claim settlement pattern by inspecting historical information and sensitize the output to the evaluated for management bias. We also compared the loss development pattern, which is used to discount the reserve, to the claim settlement pattern, and recalculated the discount rate applied to the insurance contract liability. We also recalculated the risk adjustment factor based on management selected distribution and confidence level for future loss of emergency. The second key audit matter relates to goodwill impairment at the group level. Refer to Note 2B, 4G, 4I, 4X1, and 11 to the consolidated and standalone financial statement for disclosures related to material accounting policies and balances. The total carrying value of goodwill is $4.2 billion, or 2% of the total assets as at December 31st, 2024. On October 2, 2023, the group acquired 100% of the share capital of Unibeb and recognized goodwill amounting to $1.16 billion from the transaction, which represents 27% of the total goodwill recorded on the Statement of Financial Position. The accounting for the transaction was finalized in the current year as the group utilized the one-year measurement period under IFRS 3 business combination. In accordance with IAS 36, impairment of assets, management performed an annual goodwill assessment to determine whether the carrying value exceeded the recoverable amount of the cash generating unit, the CGU, in which the goodwill is allocated and is therefore impaired at the reporting date. Goodwill relating to the recoverable amount of a CGU is calculated using the higher of the value in use and the value less cost of disposal. Management determined the recoverable amount by reference to value in use, which is based on discounted cash flow projection over which management made significant judgments on the key inputs. As a result of the assessment, management determined there were no impairment as of December 31st, 2024. We focus on this area based on the finalization of the acquisition transaction in the current year, and the goodwill impairment assessment require significant management judgment and estimation, is sensitive to changes to key assumptions, and due to the potential impact of the increased volatility of prices in various markets on those key assumptions. The key assumptions were assessed by management as being the revenue growth rate, the terminal growth rate, the EBITDA margin, capital expenditure, and the discount rate. Our audit approach in addressing this matter with the assistance of our internal valuation expert involved the following procedures, among others. We updated our understanding of management approach to performing the annual impairment assessment. This included a process by which management's key assumptions and methodologies were developed and assessing their appropriateness. We also compared previous forecasts to actual results in order to assess the performance of the business and the extent to which reliance can be placed on management ability to forecast. We also assess whether the 5-year forecast used in the valuation model was consistent with the group's strategic plan, and the key assumptions were subject to oversight from the board of directors. We also evaluated the revenue growth rate, the discount rate against valuation of similar companies. We also compared the key assumptions, the revenue growth rate, the terminal growth rate, the EBITDA margin, capital expenditure, and discount rate to externally derived benchmark. We also tested the calculation for mathematical accuracy, assessed the sensitivity of the calculation by varying the key assumptions and adjustment within management cash forecasts. The third key audit matter relates to IFRS 9, financial instruments, probabilities of default, forward-looking information, and significant increase in credit risk at the group level. Refer to Note 2H, 3C1, 4, 6, and 9 to the financial statement for disclosure of related material accounting policies, estimates, and balances. As of 31st December 2024, the group loan and advances amounted to 44.69 billion net of impairment. The group debt securities measured at amortized cost and fair value through other comprehensive income total 61.46 billion net of impairment. In aggregate, the above exposure represents 45% of the total asset at the reporting date. The result of the impairment recorded under the expected credit loss, the ECL impairment model, amounted to 1.83 billion, for which loan and advances and 496.6 million for debt securities. In assessing the impairment for IFRS 9, prescribe a forward-looking ECL model, which takes into account reasonable and supportable forward-looking information, as well as the probability of default, the PD. The PD represents the likelihood of a borrower defaulting on their obligation over the next 12 months or over the remaining life of the obligation. The 12 months and the lifetime PDs are determined differently for loan and advances and investments. For loan and advances, management developed PDs based on the group-specific historical debt rates for each industry classification. In performing historical analysis, management identified economic variables impacting credit risk and ECL for each portfolio. For the debt securities, which include sovereign and corporate securities, PDs are developed by reference to external data collected by Standard & Poor's, with adjustment for industry and country-specific risks where appropriate. The estimation and application of forward-looking information require significant judgment. Stage 1 and Stage 2 credit loss allowances are modeled based on macroeconomic variables or changes in macro variables, which most closely correlated with credit loss in the relevant portfolio. Each macro scenario used in the ECL calculation incorporates of the relevant macroeconomic variables. In the event of a significant increase in credit risk, an allowance for provision is required for the ECL, resulting from all possible default over the expected life of the financial instrument, the lifetime ECL. The consideration for past due, as well as adverse changes in a borrower credit rating, industry, or the economic environment are also factors considered in determining whether there has been a significant increase in credit risk. The estimation of ECL in stage 1 and stage 2 is discounted, probability weighted, estimate that consider a minimum of 3 future economic scenarios. The base case scenario is derived from macro forecasts, which are publicly available. Upside and downside scenario are set relative to the base case scenario based on reasonable possible alternative macroeconomic conditions. We focus on this area due to the complexity of the techniques used to determine the PDs and identify the significant increase in credit risk and the number of significant judgments made by management regarding possible future economic scenario as it pertains to loan and debt securities. Our approach in addressing this key audit matter with the assistance of our own valuation specialists involves the following procedures, among others. We update our understanding of management ECL model, including any changes to source data and assumption. We also tested the completeness of all loans and advances and debt securities to determine whether all items were included in the ECL model by agreeing the model to detailed loan and securities listing. We also evaluated the reasonableness of management judgment pertaining to the PD, significant increase in credit risk, and forward-looking information, including macroeconomic factors impacting the weighting of scenario as follows. For loan and advances, the PD, we tested the critical data fields using the ECL model for the PD determination, such as the default rate, effective interest rate, write-off data, and loan type by tracing data back to source document. We also reperformed the calculation of days past due, a key data input into the PD parameters in the group banking system on a sample basis as well. For the significant increase in credit risk, we evaluated the staging of loans and advances and compare our results to those identified and classified by management. For debt securities, for the PDs, we tested the critical data fields using the ECL model, such as the maturity date, the amortized costs, the accrued interest, the credit rating, and interest rate by tracing data back to the relevant source document. We also agree the credit ratings and historical default rate used to calculate the PDs on a sample basis to external source data, such as external rating agencies. For the significant increase in credit risk, we tested on a sample basis the accuracy of the initial credit risk and the credit risk at the reporting date using rating agency definition of investment grade and evaluated the appropriateness of the group classification of debt securities at stage 2. We also perform an independent qualitative assessment for the sample of borrowers to determine if there are any adverse public information affecting the criteria used to perform the staging. We also inspected the financial statement on a sample basis of borrowers to determine if there were any significant downturn in financial performance and in aid in assessing the staging for borrowers. For forward-looking information for loans and advances and debt and securities, we assess the reasonableness of the group methodology for determining economic scenarios, including the appropriateness of gross domestic product, unemployment, economic factors utilized by management. We also evaluated the reasonableness of the increase in the weighted use for the worst-case scenario by agreeing the forward-looking economic information to external source published or pronounced by reputable third parties. We sensitize the probability weighting using the ECL model calculation as well. Other information. Management is responsible for other information. The information comprises the annual report, but does not include the consolidated standalone financial statement and our audit report thereon, which is expected to be made available to us after the date of this audit report. Our opinion on the consolidated and standalone financial statement does not cover the other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and standalone financial statement, our responsibility is to read the other information, identify above when it becomes available, and in so doing to consider whether the other information is materially inconsistent with the consolidated and standalone financial statement or our knowledge obtained in the audit, or otherwise appear to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we're required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for the consolidated and standalone financial statement. Management is responsible for the preparation of the consolidated and standalone financial statement that give a true and fair view in accordance with IFRS accounting standard and with the requirement of the Jamaican Companies Act, and for such internal control as the management determine is necessary to enable the preparation of the consolidated and standalone financial statement that are free from material misstatement, whether due to error or fraud. In preparing the consolidated and standalone financial statement, management is responsible for assessing the group and the company's ability to continue as a going concern, disclosing, as applicable, matters relating to going concern, using going concern basis unless management either intend to liquidate the group or the company, or to cease operation, or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group and the company financial reporting process. Auditors' responsibility for the audit of the consolidated and standalone financial statement. Our objectives are to obtain reasonable assurance about whether the consolidated and standalone financial statement as a whole are free from material misstatement, whether due to fraud or error, and to issue an audit report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISA will always detect a material misstatement when it exists. Misstatement can arise from fraud or error and are considered material if, individually or in aggregate, they could reasonably be expected to influence the economic decision of users taken on the basis of these consolidated or standalone financial statements. As part of our audit in accordance with ISA, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risk of material misstatement of the consolidated and standalone financial statement, whether due to error or fraud, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentation, or the override of internal controls. We also obtain an understanding of the internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group and the company's internal control. We also evaluated the appropriateness of accounting policies used and the reasonableness of accounting estimates related disclosure made by management. We conclude on the appropriateness of management's use of going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists related to event or condition that may be cast significant doubt on the group or the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention to those in our audit report to the related disclosure of the consolidated and standalone financial statement, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our audit report. However, future events or conditions may cause the group or the company to cease to continue as a going concern. We evaluate the overall presentation, the structure, and the content of the consolidated and standalone financial statement, including the disclosure and whether the consolidated and standalone financial statement represent the underlying transaction and event in a manner that achieves fair presentation. We plan and perform the group audit to obtain sufficient appropriate audit evidence regarding the financial information of the entities or business unit within the group as a basis for performing an opinion on the consolidated financial statement. We are responsible for the detection, supervision, performance of the group audit. We remain solely responsible for our audit opinion. We communicate to those charged with governance regarding, among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identify during the audit. We also provide those charged with governance with a statement that we have complied with the relevant ethical requirement regarding independence and to communicate to them all relationship and other matters that may be reasonable be thought to bear on our independence, and where applicable, action taken to eliminate threats or safeguard apply. For the matters communicated to those charged with governance, we determine those matters that were of most significant in the audit of the consolidated and standalone financial statement of the current period and are therefore the key audit matters. We describe these matters in our audit report unless law or regulation precludes public disclosure about the matter, or when in extremely rare circumstances, we determine that a matter should not be disclosed in our audit report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Report on other legal regulated requirements. As required by the Jamaican Companies Act, we obtain all information and explanation which, to the best of our knowledge and belief, were necessary for the purpose of our audit. In our opinion, proper accounting records have been kept so far as from our examination of those records, and the company consolidated and standalone financial statement are in agreement therewith and give the information required by the Jamaican Companies Act in a manner so required. The engaging partner on the audit resulted in this independent auditor's report is Paul Williams, signed PricewaterhouseCoopers Chartered Accountants, Kingston, Jamaica, February 28, 2005. Thanks, Chair.
All from the sound of the applause, that was a very popular statement. Our first resolution. May we have a motion that the audited accounts for the year ended December 31 and the reports of the directors and auditors circulated with the notice convening the meeting be and are hereby adopted. Moved by David Rose, seconded by Livingston Young. We will now take the vote. Shareholders, I invite you to cast your vote. The ayes. Thank you.
I don't know.
Raise your paddles if you are in favor of the motion. Thank you very much.
Thank you.
Thank you, Mr. Ellis. Thanks to our shareholders in the room. We now await the results from the shareholders voting online.
The results are in, Chair.
Results are in and it's unanimous. I declare the motion carried. Come to the second resolution, which is the approval of dividends. May I have a motion that, as recommended by the directors, the interim dividend paid on the 5th of April 2024, 14th of June 2024, the 23rd of September 2024, and the 16th of December 2024 be and are hereby declared as final, and no further dividend paid in respect of the year under review.
Mr. Chairman, I never said it was 0.16. I never said it was
Yes.
I'm sorry?
I never said it was 0.6. Because I illustration. I never said it was 0.6 in April.
It appears that information is available. It has been published.
No, you just say I said it was 0.6.
It's noted. It's noted, Mr. Young.
Mr. Young, we note your observation, sir, and your recommendation. Thank you.
Thank you, Mr. Young. So the motion is moved by Arthur Ellison, and seconded by Carrie Ann Evans.
Okay, Carrie Ann
Thank you.
So moved. We will now take the vote. I invite you to cast your vote. Shareholders, paddles up if you are in favor. Thank you. Those objecting?
Yeah, Livingston.
Okay. We now await the results of our shareholders voting online. Vote is now in. With the one exception, it's unanimous. I declare the motion carried. Approval for the election of directors. The next item of business is the election of Director Frank James. Frank James was appointed Group Chief Executive Officer and Director of GraceKennedy Limited on February 14, 2025. In 2005, Frank joined the company as Vice President of Strategic Planning and Corporate Development. Throughout his tenure at GraceKennedy, he has held several leadership roles which have played a vital part in GraceKennedy's growth and success. His experience spans varying divisions of the GraceKennedy Group. He has worked in both the financial group and recently the Foods Domestic Division. He holds an MBA in Finance from UCLA Anderson School of Management, a BSc in Management Studies and Accounting from the University of the West Indies, and is a Chartered Financial Analyst. It is important to note that Frank James was previously a director of GraceKennedy Limited when he held the position of Group CFO from 2012 to 2019. Please note that further details about Frank are available on our website and in our 2024 annual report. In accordance with Article 108 of the company's Articles of Incorporation, Mr. Frank James, having been appointed to the Board of Directors since the last annual general meeting, will retire from office and, being eligible, offer himself for election. May we please have a motion that Mr. Frank James be and is hereby elected a director of the company.
I think it has been moved. It has been moved by Stacey James and seconded by Fred Kennedy.
Fred Kennedy. So moved. We take the vote. We now take the vote. Shareholders are invited to cast your vote by raising your paddles if you're in favor. Looks unanimous. Those not in favor? See any? We now await the results from our shareholders voting online. The results are in. It's unanimous. I declare the motion carried. Those directors retiring by rotation. The directors retiring from office by rotation pursuant to Article 102 of the Companies Act. The company's articles of incorporation are Dr. Paris Loayi Jr., Mrs. Vanessa Rizzioli, and Mr. Peter Williams, who, being eligible, offer themselves for re-election. Dr. Paris Loayi Jr. is the Managing Director of P&A Management Advisory Services Limited. He is also Chairman of the Scientific Research Council and the International Center for Environmental and Nuclear Sciences, and sits on the board of the Bureau of Standards of Jamaica. He is also an Eisenhower Fellow in the United States of America. Dr. Loayi specializes in advanced geographic information systems and data analytics. He's a member of the GraceKennedy's Audit Committee, Corporate Governance and Nomination Committee, and the Compensation Subcommittee. Mrs. Vanessa Rizzioli was appointed to the board on July 28, 2022. Mrs. Rizzioli is a principal consultant, founder, and director of Cranwick Consulting, a boutique finance transactions legal consultancy, advising on projects and assignments in the UK and overseas. She began her career at the law firm of Duncox, Orrit and Asham, now known as Duncox. Mrs. Rizzioli holds an LLM from Cambridge University, Queen's College, UK, and an LLB from the University of the West Indies, Cave Hill campus. She's a member of the GraceKennedy Audit Committee and the Corporate Governance and Nomination Committee. Mr. Peter Williams is a retired partner of PricewaterhouseCoopers Jamaica's assurance practice and has 4 decades of experience in accounting, assurance, and consulting services. Mr. Williams is a fellow of the Institute of Chartered Accountants of Jamaica and the Chartered Association of Certified Accountants. He is the chairman of GraceKennedy's Audit Committee and a member of the Corporate Governance and Nomination Committee and the Compensation Subcommittee. Please note that further details about all of our GraceKennedy directors are available on our website and in the 2024 annual report. All directors presented here have an excellent record of board meeting attendance and participation. The board is satisfied that these directors continue to make a valuable contribution to the board and have demonstrated their commitment to continue serving as directors. May we have a motion that the directors retiring by rotation and offering themselves for re-election, that is, Dr. Paris Loayi Jr., Mrs. Vanessa Rizzioli, and Mr. Peter Williams, be re-elected en bloc.
Moved by Mark Anthony Barton and seconded by Grace Burnett.
So moved. We will now take the vote. Shareholders, I invite you to cast your vote by raising your paddle. Agreement.
May I say a word?
Yeah, sure, Mr.
Frankly, I think it's very efficient, of course, that we elect everybody on block. But I wonder if you wouldn't, thank you. I wonder if you wouldn't extend the shareholder participation just a little bit by asking that we vote for each director individually. Obviously, that's not required at this meeting. But may I encourage that we think of it for future ones, where we might think all our shareholders could get a chance to vote for each of the directors who's being re-elected.
Okay, Mr. Edison, you have raised it. We have noted the recommendation, and it will be given consideration as you have recommended for the future.
Thank you, Chair.
Shareholders, we now await the results from our shareholders voting online.
Results are in.
The results are in, and it's unanimous. I declare the motion carried. May we now have a motion that Dr. Paris Loie Jr., Vanessa Rizzioli, and Mr. Peter Williams be, and they are hereby re-elected directors of the company. Please raise your paddles if you're in agreement.
Moved by Catherine Kennedy. Oh, sorry.
I'm sorry. Yes, go ahead.
Sorry. Moved by Catherine Kennedy and seconded by Tawana Gray. Sorry, Tawana Gray, our group controller.
Yes. So it has been moved and seconded, and we'll now take the vote. Now is the time to put your paddles up. All paddles in the air. Thank you. Our shareholders in the room have voted. Are there any objections? That's an objection, Mr. Ellison?
No.
Oh, you're late in bringing it up. Okay. We'll await the online vote from those shareholders online. And again, it is unanimous. Thank you, both the shareholders in the room and the shareholders voting online. I declare the motion carried. Thank you, shareholders. We now proceed to consider the resolution to approve the director's remuneration. May we have a motion that the amount shown in the accounts of the company for the year ended 31 December 2024 as fees of the directors for their services as directors be and is hereby approved, and B, that the compensation subcommittee of the Corporate Governance and Nominations Committee of the Board of Directors is authorized until the conclusion of the next annual general meeting to fix the fees for the directors. Have a motion?
Moved by Margaret Campbell, seconded by David Rose.
So moved. We now take the vote by raising your paddle if you're in agreement. Thank you very much. Those objecting? We now await the results from shareholders voting online. Vote is in, and it is unanimous. I declare the motion carried. We now have a motion that the PricewaterhouseCoopers Chartered Accountants, having signed their willingness to serve, continue in office as auditors of the company pursuant to Section 154 of the Companies Act, to hold office until the conclusion of the next annual general meeting at a remuneration to be fixed by the directors of the company. May I have a motion? Okay, sir. Seconded.
Catherine.
So moved. We will now move to the vote. May I see the paddles if you're in agreement? Looks like we have agreement. And any objection? Not see. Yeah.
Just to get an answer. Obviously, there's a proviso here that says on the other information, thank you, that the management is responsible for primarily most of the information here. And there could be a possibility, I'm not suggesting that there was any, but could there be a possibility of a disagreement with the auditors on certain points? Just to let us know, would you happen to have faced anything like that, or are you so satisfied with their services that we think it's reasonable to expect that this doesn't matter in the future?
I wouldn't say that, but I can ask Paul if there were disagreements.
No, we didn't have any disagreement.
I'm very happy to hear that. It's so good to know that our auditors and our managers are 100% agreed.
Thank you, Mr. Ellison. We now await the results from the online shareholders. Again, it's unanimous. I declare the motion carried. So this probably is the most popular motion, which is the conclusion of the meeting. Ladies and gentlemen, this concludes today's meeting. To all of you who have attended our 2025 annual general meeting, whether here or online, thank you very much for participating. Thank you also to the hard-working GraceKennedy team and the service providers, the visual technology solutions who made today's meeting possible. I would also like to thank again and congratulate our Group CEO, Mr. Frank James, and to recognize GraceKennedy's executive and senior management team, my fellow directors, and all our GraceKennedy team members across the world for the ongoing dedication and commitment to the company. Ladies and gentlemen, allow us a minute to conclude. Looking ahead, we are confident in our ability to unlock greater value and to unleash our collective potential to create lasting and even more meaningful impact. Together, we remain focused on achieving GraceKennedy's vision of becoming the #1 Caribbean brand in the world by 2030, whilst providing strong returns to our shareholders and improving the quality of life to our team, customers, and the communities we serve in the world. Thank you, everyone, for your continued support. Good afternoon, ladies and gentlemen.